question.
What's your question?
If someone doesn't want to use their own income to qualify for a loan, would they be able to use a rental income to qualify? How does it work?
Yes, you can use rental income to qualify for a loan. So all that means is what the bank will do is they're going to look at they're going to look at your credit is the most important thing in that. And they're going to look at what kind of rent can you get from it. As long as the rent you're getting is higher than what the mortgage will be, they will do the loan for you on that property. So that's a really good one if you're like, hey, I don't have the capital, but this is a great opportunity. We want to jump in on this. That's a good one to do like kind of a test to see, because the bank's not going to lend you on that unless the rental income looks really strong. So you can kind of start that process and just see, because if a bank's going to back it, and they used to only be hard money banks that would do that, but now a lot of the big banks are doing those loans. So they will do the analysis for you. You can get them to do almost all the legwork for you. So that's a really good one. Good job. Yeah, yes.
What about trying to buy a rental property as an LLC?
So LLCs are, well, most of the time, it has to be, first of all, to an entity, so you, but it's moved into the LLC as soon as we close. So trust, LLC, anything like that is totally fine. You have to have an attached credit profile to the home. But then after that, it can be moved into an LLC for all write-offs, maintenance, things like that. People that buy Airbnbs, and like a lot of them, that's exactly what they do. It's funded in their name, and then it's moved from their name into like, a capital investment group or something like that, right? LLC. So it's moved in that, which is really smart if you're doing multiple Airbnbs, is the way you're going to count the income on them. It's also really important that on Airbnbs, just as like this isn't something people remember, but maybe it'll spark something in your brain. If you're on your first Airbnb, you're reporting your income, there's a spot on your taxes to report it as rental income or as investment income. You would think you would want to do it as investment income because it's not technically a rental, but you will make your life so much easier with a bank if you do it as rental income. Because then they won't even check if it's an Airbnb, they will just look at your deposits. And that just will save you a ton of time. Yes.
What would I do if maybe I don't have the best credit and I have a decent job, maybe I have some student loans? Is it worth it for me? Like, if I feel like I'm quite a while out from buying a house, is it worth it for me to even talk to a lender still, or should I just wait?
Oh, such a good question. That is really important to do, to get all those unknowns answered immediately. Kathy said the thing about people being scared of their credit. Normally, we're the most scared of our credit when we feel like we don't want to know what the answer is or what our credit is, right? It's like going to the doctor if you got a pain, you're like, I don't want to know what that is. Same thing. But running your credit, having a lender look at everything, like our job is to educate you. So to tell you exactly what you'll qualify for in the future, like, hey, we'll tell you, like, hey, you clean this up, you pay this car off, you get this done, you do these things, your credit's going to rise. It will set you on a plan to be ready to buy maybe in a year or two.
I heard that it is a myth to try and pay everything off. That it's actually better to have
A balance?
Open.
Isn't that so ironic that they don't want you to have too high a balance, but then they don't want you to pay everything off. It's like, it's a ridiculous tandem, right? So the rule is it's 30%. So if you have a card with a balance of 1,000, like the max that thing out goes up to 1,000, 30% is your sweet spot, so $300. If you have multiple cards of revolving credit, right? Let's say you have 4 cards, you have a Target, a Best Buy card, a Macy's card, and then a Citibank or something, right? And they're all at $1,000. That's your limit on each one. And you max 3 of them out. Those 3, the maximum those 3 will drop your score is 100 points. Now your score will come right back, if you max them out. All 3, but the rule is for every single maxed out card, what the credit bureaus are assuming based on that scoring model, you have financial problems. If you're maxing more than one card out in a quick succession, they're trying to tell other people that will lend you money, check this out, they're maxing stuff really quickly. So there might be an income problem here. So if you're going to start the process of buying, you want to clear as much debt as possible, keep your cards low, 30% use debit cards for as much as you can, and it's going to make you look the best on paper. Yes.
Are there any options for me if I run like an all cash business and I don't really declare a lot on my taxes, or I'm self-employed and I just write off all my taxes? Like,
There
can
are
I get a loan?
awesome loans for that now. Those loans used to be all hard money. Now, if you are 100% cash and that's it, like there's a guy that we know that legit owns a taco truck that's like, I don't even know how much cash that thing generates, but he, to the IRS, he makes like peanuts, per month. But if you look at his bank accounts, he's making like a ridiculous amount of money. So finally, it took a long time, but the federal government took over loans in 2009. It took a long time for other banks to kind of get some strength back, but now they do. So if you know anybody, you have a friend, a family member, somebody that gets a ton of cash, they do whatever, and it's going into an account. It has to be going into something, right? It can't be in their mattress, under their mattress, or in their backyard, right? Because we do know people with that cash won't work. But if it's going into an account, they do it like every month, you can absolutely qualify for a loan. And crazy enough, the interest rates on those loans are almost the exact same as the interest rates on a normal loan. So that's a very advantageous thing. As you start making more money with your investments, sometimes a lot of the way the money is coming in is more cash based. Going a bank statement loan is pretty strong because then you don't ever have to worry about filing a maximum amount.
Just going back to the numbers again, can you explain a little more about what the number on top versus bottom? It's just like a subtraction there, or
On the calculation,
Yeah,
the annual payment, the top one. Are you talking about this one, the payment with PMI?
when we go all the way to the bottom, we saw like let's say the $4,100.
The 41.
You say initial monthly payment.
Yeah, payment with PMI.
Yeah.
What is that number?
Yes.
I did not explain that. I'm so sorry. So it should tell you, right? It should say this. What it should say is it should say this is your payment. That 4156. That's your payment with your taxes that we calculate, the home insurance, and the mortgage, the principal and interest. Right? It's all those combined in one. So to know what that is, like if you scroll right past it, those numbers are $341 in PMI. You see that right below it. And then if you keep going past, like below the 4,156, and then it'll say 17,500 for the down payment. And then if you scroll, keep going down, you'll see the monthly tax is $520. The monthly home insurance is $83. So all those numbers, they make up that $4,156 payment. Does that make sense?
Okay.
They're all going together in it. So if you would want, they should just have a section that's just the principal and interest. But if you wanted to just know what the principal and interest was, just the mortgage, you would go basically to where the property taxes, the PMI, and the home insurance. You just put 0 for all of those, and it's going to give you the true PMI, the principal and interest payment on it. Good question. Yes, Kat.
Can you use my cash that is in my mattress? It's not really in my mattress, but it's in a safe.
Yes. So you can, if you do have somebody that has their cash hidden somewhere and they don't have a treasury map, but they do have access to it, they can do a loan, but that's higher risk for the bank. So what the bank requires is they put 30% down. So on a $500,000 property, what would that be?
150 down.
Yeah, so big chunk, right? So they'll take your money, but they want you to put a big amount of it towards the property to convert it into the equity automatically. That's a win-win for them. They give you the money that's insured, and then if you don't make the payment on the house, they get a great asset. It's got a lot of equity in it. But it is a good loan. That's
Is
the
there
one that
another way to get around that 30%?
You can actually do, what was the lowest we did? Didn't we do one for 20, Melvin?
Which one?
It was
Qual?
it was 20. It was 20%. You can do 20% with excellent credit. If you have excellent credit, 20%. 30% is like you have credit where you can't normally get a TV at Best Buy. They'll still do your loan. 30%. Go to Black Friday and they're like, get the candy in the aisle. Yes.
What about getting my side hustle cash that is sitting under my mattress into my bank account and not having to pay taxes on it?
So the federal government will not be notified of deposits within a bank account as long as they don't exceed a total deposit of $9,000. So if you put in 9,000, it's very irregular that you ever deposit cash. They will flag it. Now, it doesn't mean anything bad happens to you. That just means they flag it. Your name gets rolled up to somebody. They double check to make sure you're not on any list. And as long as you're not on any list and weren't recently in Tijuana, you're fine.
Is it like each year within a year, or is there?
One time.
You know, it's mostly like so every bank. So the Patriot Act established that basically, if it's out of their algorithm of deposits, which they don't share with us, but I'll tell you, I've had people deposit stuff that's gotten flagged immediately, like based on the way that they've been traveling, like they've been doing a lot of traveling, like over borders and spending time, and then all of a sudden they're depositing cash. It could not even be that much cash, but if there was a period of time that wasn't happening, and now that's happening a lot, that'll get flagged. Yes.
I used to work at the bank, and
Oh, so-
I'm the one that flagged me.
Really? So we should be asking you. Do you know the algorithm?
Yeah.
You do know the algorithm. You know the secrets.
No, it's just up to the tellers and the manager.
Ah.
Yeah.
Well, that's oh.
You see those patterns,
You'll
and then
notice
you
it.
flag them
Ah.
to the institute.
So there you go. You gotta be friends with her. Make sure that she handles your deposits.
Yeah, some people they just try to make it like less than 9,000, like every other day, or because once you punch in the number, you see all the transactions.
Right.
So
It's pretty obvious, right? When
Yeah.
people are trying to get around it. So, yeah, if you can sell stuff and have like receipts for it, that's the easiest way to deposit, because then banks will just ask you for a receipt. If you have a receipt, you sold a car, you did this. Me and my wife just had to do this. We actually did sell a car, and the bank was like, "Well, what's this money?" And we're like, "It's a car." Oh yeah, we're like, yeah, here you go. And they're like, "Oh, never mind." Then we mentioned it. So yeah, like if you have a receipt of some proof of where it came from. This is another really good thing. You know, if you're getting married, 100% of the gifts you get for your marriage are completely tax free. So if you're thinking about maybe moving it, your girlfriend or boyfriend has been bothering you for a while, I mean, there are some real good benefits. You get that right in there and not. So that's another good one. That one won't haunt you.